Ladies and gentlemen, in the upcoming week, crucial financial data, Fed actions, and economic indicators will substantially influence markets, sparking concerns about an impending recession and uncertainty surrounding Tesla stock. We have a very significant week ahead of us, with a lot of financial data that could strongly impact the market, including Tesla stock. Please check the weekly economic calendar to see the upcoming market downturns. The main reason for this is that the Federal Reserve, Fed, seems to be unconscious. They are saying that they want to increase rates even further, while we are heading towards a recession and inflation is decreasing. Yes, perhaps they are getting what they want a little slower, but now the market understands that the Fed is not paying attention and will push us towards a recession. The market had realized this as early as May, and especially after Nvidia earnings, there has been pricing for a recession in the market. During the crash of 2022, especially in September, October, November, and maybe even December 2022, you were seeing recession pricing in the market. There was relatively less risk in buying stocks in the market towards the end of 2022. People got involved at soft prices. Without the threat of a recession, an expert Fed has shown that they are very impatient. We will see a recession. The question is how deep, when, and how long it will last. These are questions that are currently unanswered. Are we heading towards a recession right now? Or is it something that will happen before or after 2024? Will we see credit or defaults rollovers? Will corporate insolvency become a significant issue? These are just questions without immediate answers, which is why this next part is very important. Any economic data that points toward a recession or is happening will impact the market on a large scale. So, on Monday, you will receive the Dallas Fed Manufacturing Index. I don't know how much it can influence the market. It has been quite negative for a while now, and you might be expecting around -10. If it comes in more negative than -10, we may see an impact on the market, but don't rely too heavily on it. It's not a significant data point coming in right now. Then, on Tuesday, we will get the S&P Case-Shiller home price month over month and year over year. This will come at 9:00 a.m. You will also get the sales of new homes month over month and year over year. Additionally, the Richmond Fed Manufacturing Shipments Index will be available, and you might be expecting around -5. Here the story is the same. It has been negative for a while, so you will need to see a significantly negative number to shake the market. These data points are not very important to react to because we've been in a negative phase for a long time, and nothing positive has happened yet. Dallas Federal Reserve Services revenue might be slightly important because we haven't seen a negative figure since December 2022, so it's necessary to keep an eye on it. This data comes in at 10:30 a.m. on Tuesday. Besides that, you will also have Federal Reserve Chairman Bauman's speech at 1:30 p.m., and Federal Reserve speakers are usually of great importance. If Federal Reserve speakers understand the message being sent to the market and take on a slightly positive tone, suggesting perhaps we should consider holding off on rate hikes or even contemplate rate cuts, this could bode well for the market. If the Federal Reserve changes its tone, which I don't expect, but if they do, it could be beneficial for the market. It might indicate that we're not heading into a deep recession, or at least not a severe one, as the Federal Reserve is considering reducing rates soon. However, don't put too much faith in this. The Federal Reserve wants a deep recession. That's the bottom line, and I believe the market understands this fully, at least up until now, as we've witnessed a downturn in the market over the past few trading days. On Wednesday, you will receive the first round of important economic data in English, known as durable goods orders month over month, and you should expect a rather poor number, 1.4%. Last month's figure was positive at 5.2%. This makes you wonder how the market is pricing in a 3% GDP when last month durable goods orders were negative at 5.2%. This is beyond my comprehension. If this number comes in even worse, you might face difficulties. Additionally, you will also receive durable goods orders excluding transportation and durable goods orders excluding defense, both on a month-over-month basis. Then you will get non-defense goods orders, which were positive at 0.1% last month, and now you should expect a positive 0.2%. This information is primarily for Wednesday. On Wednesday, you will also receive data from the UK regarding car production year over year and data from Russia, but this data typically doesn't significantly impact our markets. China, Japan, and Europe also have a lesser impact on the market. These are the countries and regions that have an impact on our market, and a lot of global data is coming in this week. However, I'm not sure if anything will have a significant impact on the market, except perhaps the German inflation rate, which is due on Thursday at 8 a.m. Eastern Standard Time. This might be a bit more critical, because Germany is the largest economy in Europe. We'll have to keep an eye on it. Then, on Thursday at 8:30 a.m., you'll receive the GDP growth rate quarter on quarter, the final numbers for Q2. You're expecting 2.2%, but when we received the revised version earlier, it was at 2%. So if Q2 GDP gets revised down to, let's say, 1%, it could be a concern for the market. This is a weekly basis, and every year, at any given day, you get initial jobless claims. If we're heading towards a recession and unemployment is increasing, it's evident that there will be an increase in initial jobless claims first. You're hoping for a slight increase up to 217,000, but we've been coming from higher levels. So if you start getting numbers around 270,000, it's still a good initial jobless claims report. However, if it starts reaching 250,000 or 300,000, it could raise concerns about a recession. Besides this, you will receive the final estimates for Q2 GDP sales, real consumer spending, core PC prices, corporate profit, and jobless claims, along with a 4-week average, which is approximately 215,000 at this time. Up to now, we are not seeing real growth, and if we look at it, it indicates towards illness. You will receive the pending home sales month over month, pending home sales year over year, and Kansas Fed Manufacturing Index at 10 a.m. These can be quite important for the market without a doubt. You will have to see what happens. But the Kansas Federal Reserve data often has a significant impact on the market. You will also get the Kansas Federal Reserve Composite Index, which has been declining significantly for some time. You can expect it to be around -1. At 1 p.m., you will hear from Federal Reserve Chair Cook, followed by a 7-year bond auction, and then at 4:00 p.m. Eastern Standard Time on Thursday, Federal Reserve Chairman Powell will speak, with the impact taking place after the stock market closes. There has been some backlash against the Federal Reserve, and they are currently taking a cautious approach, looking back at the data and seemingly leading us towards a downturn. At this time, it will be difficult to understand what the Federal Reserve is doing. So, will Federal Reserve Chair Powell try to reduce losses as he did last time? Or will he say that we need to keep interest rates low for a longer period? We will have to see what happens on Thursday, which is a significant event. And then, on Friday, you will look at France's annual inflation rate and the UK GDP numbers. GDP numbers can be important but may not necessarily indicate a big reaction. However, the Eurozone's annual inflation rate and monthly inflation rate, which will be released at 5:00 a.m. Eastern Standard Time on Friday, could be more significant. The big data for the upcoming week is usually released on Friday. It is expected that the personal income for the month will be around 0.55%, which is better than previous data from August. This data is typically released at 8:30 in the morning. Then you will also receive the personal income data for the month of August, where a significant improvement is expected, around 0.4%, compared to the previous figure of 0.2%. I would also like to mention that personal income for the month of July had increased by approximately 0.8% month over month, and you are expecting around 0.5% this time. There might be a slight decrease, but it is still quite an attractive indication, which is why your GDP estimate stands at 3%, as you have seen very strong personal income figures for July. Let's see if this stability continues into August. Personally, I believe it will, but how government data works is that it is presented to you, and then you get 3 signals, which can often differ significantly from the initial indicators. Occasionally, after 3 months, you might receive a positive report, but things gradually start to decline, and you end up with data that isn't as positive as initially thought. However, the market has already priced it in weeks or months ago because of the improvements. So even if we see a decline in the indicators, you might not even notice it, and it's something you should keep in mind. The market will also begin to understand this concept, that even if GDP comes in much lower and perhaps not even negative, the market might wonder if these improvements will lead us into a monthly recession. So you should keep that in mind as well. We will also have the core PC price index month over month and PC price index year over year. Personally, I don't think these matter much at the moment. I will tell you why. The market has already priced in rising rates for a long time. So guys, don't get too caught up in this. The market is falling because we are heading towards a Fed-induced recession. The Fed won't stop until we are in a recession. So I don't think a slight decrease in currency month over month will make much of a difference at this point. But is this what will take the Fed to stop, like the market hopes? Probably not. So my opinion is that the Fed has made it very clear that you will have to see pain in the economy or they won't stop raising rates. They are committed to damaging rates as the market expects, but it might not happen. So my opinion is that it won't. Now let's talk about Tesla stock. As I have mentioned several times before, I think there is a possibility of further downward movement in the overall markets. I believe that S&P and Nasdaq need to fully price in the recession and potentially go lower. In September-October, we were not in a recession, but the markets had already priced in a recession. So the question is, where do we need to go to partially price in the recession? Is it 400 on the S&P? Is it 410? Is it 390? Is it 380? I don't know, but I do know it's below 430. I know that multiples are still very high, about 19 times next year's earnings if the market believes a recession is coming. If you want to partially price in the recession, you might have to go 50% down. And that's where we are right now. I don't think we've priced in 50% of the recession yet. This means there may be more downside ahead, but recently, we've fallen quite sharply, so I wouldn't be surprised to see some sort of bounce or sideways trading. But for the bullish folks, it's bad news that you didn't cross that level on the S&P 500, which was at 43.134, and you didn't do it. On Friday, after finding support throughout the day, you sold off at the end of the trading day, closing at the lowest point of the trading day. That didn't look good. You should also consider that the upcoming week is the last week of the 2023 calendar year for hedge funds and institutions. Often, next week is the worst week for stocks. Believe it or not, it's the worst week for stocks every year. This is because there is a lot of profit booking for the fiscal year, which is now 2023, and your fiscal year 2024 starts on October 1st. So many people book profits and investors start thinking about how 2024 will be. Should we hedge for 2024? And I think many people will do that, and it increases the chances of the market going down. This is quite straightforward, but in terms of Tesla stock specifically, I'm very bullish for 2024. You shouldn't really bet against Tesla in 2024. But do I think you can get cheaper shares in the next couple of weeks or the next month or two? Yes, there is a chance that Tesla stock could go down or trade sideways. That's also a real possibility. So what do you think is in store for Tesla stock and the broader markets in the upcoming trading week? Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing and see you in the next video.